Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Friends, in this video, I'm going to talk to the topic finding opportunities. In every market context, there will always be opportunities which others are not interested in. Some sector may be out of favor. Some stocks may get sold for reasons which are related to something that just happened. Investors may be losing patience in some other stocks simply because they have been invested for too long and have not been able to get the desired results. Clearly, even at market highs, during the most intense bull markets, there will be instances of garden sales happening in another part of the market. As an investor, when the markets are seeing a secular rise like we are seeing now, it's important to see where this sale is happening and if something interests us. Whether you're an investor or a manager, by focusing on those sales, you will ensure that you don't buy something else at elevated valuation. Whatever you buy will always be at valuations which are acceptable to you. Now, there are situations where managers do invest even when they find valuations unacceptable to them. This happens in mutual funds when flows are very, very intense. But as a manager, I am not inclined to do that. I'd rather wait for valuations to be in the zone of comfort that I am used to. So what happens if somebody gives me money at the market high? I'd rather wait where the valuations are a little stretched, but I would invest where I'm comfortable with the valuations. So deployment would happen in part and then gradually get completed whenever a correction sets in. Investors who have already been onboarded and who have fully deployed capital wonder what they should do. My simple advice to an investor who is already fully invested in a product which we manage is, if we have an opportunity, we would definitely come to you. The fact that we are coming to you to invest more is purely based on a conviction in an individual opportunity. It has nothing to do with the broader market. That opportunity will not wait for broader market sentiment to come to a zone which is comfortable to all of us. That opportunity is just giving us a window to invest. And if we miss that window, we would end up missing out on the opportunity itself. So, when we approach you with an opportunity or tell you that we need more capital in your portfolio, you should top up capital to the extent you are comfortable with, to the extent your liquidity permits, and to an extent that the idea gets adequately bought. So, at least something between 5 and 10% of your corpus may usually be needed when opportunities are spotted. This way of being very opportunity specific, very idea centric, and very focused on our individual priorities or portfolio priorities ensures that we don't get distracted by the broader market, we don't get distracted by sentiment, and our focus is on what we need to do. This ensures that even at a market high, we find some ideas which are to our liking, which are trading at valuations acceptable to us. And by giving those opportunities capital, we ensure that a right sized position of that stock finds its rightful place in your portfolio. Now, this is what we would like our clients to do under conditions like we see now. And this is why we would always be approaching you with specific requests for capital. We are calling in capital because we want it for a specific investment. We are not calling in capital because the markets are at a high or because we think that you will give capital only now. None of it. We are very, very opportunity specific and we want you to participate in that opportunity and we don't want you to miss out on any opportunity. And this is very important for investors who have been there for many years with us, because there are situations where new investors participate in new opportunities, but old investors tend to miss out simply because they are trying to second guess whether the overall market is at the right place. Please appreciate, a stock purchase happens only when that stock is at a place acceptable to us, which is the right place. So, if we are second guessing the market and try to make up our mind on whether we should be investing in a particular stock, you may end up making the wrong choice of sitting out. Because sometimes such stocks end up being very big drivers of the portfolio, and not owning that stock would be a tragedy for our existing investors who have been with us for a long time. We would not like that to happen. And that is precisely what we want you to focus now when the markets are elevated, but we may still have some investment actions to be done on your behalf. We'd like you to focus on those actions. Give us the capital. Help us to size those positions and make sure that you participate in every investment opportunity which we identify and ideate for you. Thank you for watching this video.